And the stock market is crazy and chaotic. We've helped you. Oh, shit. All right.
Hey, girl.
What's up, everybody? My name is Brad. That is Fat Man Zoom, and this is Own the Chaos. The stock market is crazy and chaotic. We've made it our mission to help you own it. The stock market right now has been crazy and all over the place, and so we decided to come up with 10 stocks for the month of April that we think are going to be absolute steals and yield some pretty serious profits. But before we get to that, make sure you're liking and subscribing. Also, if you are watching all the way to the end, which you very well should be, make sure that you put in the comments what your favorite stock is, or if we're just smoking crack on all of these. I don't know. Let us know in the comments below.
Let's get this party started, Smith.
All right, so Fat Man Zoom for number 10. And these are in order of succession, by the way. This is actually something we haven't done. We just kind of been random about it, but these are in order of importance. Number 10, if I told you that the 10th stock on this list was a stock that files your taxes for you, has a 5% dividend yield, the CEO is a former president of Uber, would you believe me?
No, I wouldn't. Now, if it wasn't the former president of Uber, then I would say it's my mother. But other than that, no, I wouldn't.
All right. So actually, this stock does exist. And in fact, it is H&R Block, which I thought was really interesting. So yeah, H&R Block, 5% dividend yield. Tax season was extended to May. Last year, H&R Block was thrown through the ringer. If you recall, tax filing dates were thrown all over the place. So it really threw H&R Block for a loop. They didn't really have a whole lot of time to prepare for budgeting. You know, it just wasn't business as usual. So earnings were all over the place. This year, though, they're coming back very, very promising. And I think that they're going to do a really good job this year. 22 million people filed their taxes through H&R Block last year. I think that probably does increase. They're looking to actually compete with TurboTax and the like. When you have the CEO that was a former president of Uber, I would imagine that when you have a positive cash flow and you're looking at a tech stock like this is probably a sigh of relief to you when you're coming from Uber. And so, but also coming from that tech side and being very tech savvy, I think this really actually does do very well for the company, and I just like them. The way that they've gotten beaten down, and you can make some arguments here on the chart that, you know, oh, it's already gone up. But I think, in my opinion, this does have a lot of room to run still. Trading at $21.50. It has had a really nice move up, but all signs, in my opinion, are still pointing bullish. We still have earnings that are going to be coming up in the coming quarters after the filing date in May is through, that I think sets up H&R Block very, very nicely.
Yeah, you bring up a good point. And when you look at H&R Block historically, because of the traditional deadline, their 2 quarters after this earnings are negative and they're poor.
Right.
And so I don't know if people are anticipating that it should be different this year. So that'll be exciting to see. Number 9, Waste Management. Now, before you tell me this is a shitty stock,
It's a trashy stock.
before you tell me it's a trash stock, I'm going to tell you, in February, Fortune Magazine named Waste Management top stock, most admired stock. Now, not one of the most admired stocks.
Yeah.
For the 3rd straight year, top in its industry, in its sector. And that should show you how the general sentiment of this company is. And when you really look at it, I get it. It's not sexy. It's not glamorous. But from a reopening play, I really like this stock. They're spending money. They purchased ADS last October, which is Advanced Disposal. Just widens their reach, gives them more exposure to the Southeast. They're going to see continued revenue growth. Their CEO talked about that.
Yeah.
But what's really important is they're actually going more digital from the pandemic. They've looked into like expediting that process. And also their CEO mentioned how the pandemic helped them with the cost-cutting strategy, which a lot of companies have seen that. It forced them to be more lean, to really evaluate their balance sheets and their P&Ls, and I think they're going to benefit from that. And they've talked about how they're going to have increased margins because of the cost-cutting measures, but also coinciding with the reopening. This stock should see some serious revenue growth, so I'm excited about Waste Management.
So what you're telling me is you like your stocks a little on the trashy side.
I won't marry them, but I'll date them.
All right, so you're probably looking at this chart and thinking that we're smoking crack. And, you know, I think that there's definitely room for this to pull back a little bit. Looking at the charts here, it's trading well above the 50-day moving average and the 200-day. It's screaming on the RSI. But for all of the things that Fat Man Zoom said, I agree. I think this is going to be a good one. but it may be worth waiting on a pullback, which we may see in April. So just be on the lookout here. Either way, we think this is going further north. And if you're looking for a potential area for this to pull back, $123 seems to be a reasonable area as far as supports are concerned. So if this starts to pull back any, I think it does try to retest that 123 area, 124. So be on the lookout for that spot there. For me, my number 8 stock, Fat Man Zoom, is a Own the Chaos favorite. We love this stock. We've loved it for the last year. Ever since Warren Buffett decided to dump it, we just came in and scooped it right up. And that is Southwest Airlines. Southwest Airlines continues to roll. We think we've looked at reports that we think that air travel is going to not come back to what it was in from 2019, but it's going to triple from that, from pre-pandemic levels. Airline demand is going to triple. And a lot of people would argue, well, we're not going to see as much demand from, especially since we've been so bullish on work from home. Well, wouldn't that make an impact from a business side of things? Like there's not going to be as much business travel and that sort of thing. But my argument to that would be just what we just did last week. We went away. And we were still working. Yeah. And so I think that that's what we're going to see a lot of. People are going to be traveling and going to be able to work at the same time. Obviously, pent-up travel for vacations is going to be a thing. Why do we like Southwest the most? The reason is because they have the highest break-even load factor, which is nearly 80%. If you guys don't know what that means, it essentially means that the break-even load factor is the amount of passengers they need to break even on each individual plane. It's the highest in the industry. Not only that, but they have plans to order up to 300 737 MAX airplanes by 2030. So that is, and I think that's probably going to be more than that. And so to me, that just speaks volumes on how Southwest is actually going to see demand moving forward over the next decade. So they have earnings on April 22nd. They're estimating earnings per share at a loss of $1.88. Now, in the last year, I have not tried to predict their loss, their estimating earnings per share. I think, though, that this is going to be one that's worth anticipating that they actually beat on. And you've talked about how you've been on Southwest flights and they're packed. I think they actually come in at around $1.36 is going to be a loss of $1.36, I think, is going to be what they come in at. And I've said that I don't think it really matters what they come in at, but their outlook is going to be huge. And I think that that's the outlook we're going to have here for that.
Domestic travel sets records this year. Fat Man Zoom guarantee.
Yeah. Looking at the chart here, I think that $58 seems to be a reasonable area that we could see this for a pullback, but I don't think that I would wait on this too much longer because I do think this goes higher. 62.76 is a recent high from a couple weeks ago. I think we blow that out of the water.
At number 7, Coca-Cola, KO. Now, this one's tough, and my next 2 stocks actually, you can pick either of the competitors. So what I say for Coke stands for Pepsi as well. It is a tough decision. I'm going to lean towards Coke, and here's why. Because I like Coke. Coca-Cola. Reopening of hospitality. Coca-Cola relies more on hospitality than Pepsi does.
Yes.
Now, we liked Pepsi during the pandemic because of their diversification.
Yes.
But as a reopening, I like Coke better. 50% of revenue from Coke comes from away from home sales. It's a huge number.
I had no idea.
Yeah, or that's a huge percentage. So as we reopen, restaurants open, hospitality goes to full capacity. This should bode well. The earnings, it's all about the guidance, so we should hear that in the earnings. I like that. Also, I've talked about this before with our Chaos crew. Topo Chico hard seltzer launch. I'm excited for that. That just launched. And I think that this won't be their first foray into alcoholic brands. This is a non-alcoholic company. The first time they're getting into alcoholic brands.
Yeah.
I think there's going to be some huge money into it. Topo Chico is the perfect brand to try this out in. I think they're going to see success. And I think Coke subsequently is going to be moving. Great yield as well if you're looking for a dividend play.
Yeah, you look at the chart here, and it's actually working its way back up to where it was back in December. It was sitting at $55 almost, $54.93 to be exact was its previous high. It fell off the wagon a little bit. Leading into earnings, though, recently, they actually had some pretty good outlooks here. Looking at Coke, it looks as if it's trying to retrace and go all the way back up to its $54.93 highs as of recent. And so I think that's probably the trajectory that we're headed in. You could almost venture to say, Fat Man Zoom, that this is a cup and handle pattern that we're starting to experience on the daily chart. So having said that, I do think that there's going to be a little bit more of a cool down period maybe for about a week or two before we start to move higher on this, because it has gotten so hot recently. But don't ignore this. Put this on your watch list. In my opinion, I think it's a really good solid buy. All right, so for me, next one is going to be at number 6, Spirit Air System. And yes, yet again, we have something that's related to the travel industry, but this is kind of going to be the theme for the month. Travel is going to open back up. The weather's getting warmer. And we just got done saying about how Southwest Airlines just ordered a bunch of planes. Yeah. Spirit Air System's biggest client is Boeing, and they actually build fuselages for them. So 100 planes for Boeing means 100 fuselages for Spirit. They also have other clients as well, such as Airbus. So as Airbus, as Boeing continues to get orders coming in, which I think that that's only going to continue to grow, I think that Spirit Air System also continues to grow. You look at the upside here, and not to say that Boeing doesn't have more room to run, because I think $300 is coming for that. But you look at something like Spirit Air System, and pre-pandemic, pre-737 MAX issues, this was sitting at $100 a share. So even where it's sitting at $49.24, this has a lot of room to run. The upside here could be double or better.
Yeah, I'm excited about that. We've been on Spirit for a long time, so I'm excited to see when these orders continue to come in, because Southwest is not going to be the last big airline to make a purchase.
Yeah.
Next stock we have at number 5, Visa. I almost put American Express on here. I really wanted to put American Express on here.
I was thinking MasterCard.
And I think you could pick any one of those three. And I really thought about American Express because of business travel.
Yeah.
However, when you really look at the fundamentals and you really look at the financials, how can you not go with Visa? I think, to me, it's Visa. MasterCard's a really close second.
Yeah.
American Express is a clear third. But any one of those, I think they're going to do well this month. But Visa, the numbers are just so much better. They held up surprisingly well with their revenue, even though they got beat down over COVID. They have held up well. So I'll give you the revenue for the past 3 years. 2018, $20.6 billion. 19, $22.98 billion. And then last year, $21.85 billion. So they really didn't miss by that much. They didn't see growth, but I think we see that this year and even next year. Next year, my hope is that we have a $25 billion 2022 for revenue.
Yeah.
The key is their margins. Their margins are insane. Their profit margins this year are likely going to come in at 50%, which is absolutely bonkers, especially for a company that has been around so long. This is the power of a digital company, of a fintech company, in the margins. And I know Visa feels like an old dog, but I will put them in fintech, and the margins are going to stay, and they're going to continue to do well. So I'm excited about this. What do the charts say?
So the charts for me are this chart is perfect. Mm-hmm. You look at the weekly chart here, and we're talking, you go all the way back to 2018. This literally has just continued to go up. Obviously, the crash is what it is. Everything came down, but Visa has continued to hold its own. And we come back out to the daily, and it's been holding this 50-day moving average rather well, and it's pretty close to where the 200-day MA is too. So it's back up over that. I think that if it does give you a chance to come back down here around 210, then I would take it. Continue accumulating this. This is not something that I would just try to time. I think that Visa is going to be a really good one as well. Number 4 for me, Fat Man Zoom, and I have to admit, I'm in this one, I'm in it deep, and I'm red. But I have no worries or qualms about this whatsoever, and that is going to be Airbnb. Again, just another one that's going to be a beneficiary of travel, and more importantly, domestic travel, I think, is what's really going to be at the forefront for Airbnb. We've looked at people love Expedia, but for some reason, they've kind of been shying away from Airbnb, which doesn't make any sense to me. So I think that once we see numbers from Airbnb, which their earnings will actually be at the beginning of May, I think there's no official word on that just yet. But just judging by the way that they've been issuing their earnings, it looks to be somewhere around May 5th is when we'll probably get earnings estimations from them. And I think that those earnings are going to be astronomical. We talked about how in 2020, they ended up IPOing at the end of the year. They set the bar pretty low for themselves. So I think that they're going to surprise very much so to the upside. With it sitting at $180 a share right now, my average is at around $194. So I'm not that far off the mark. And like I say, I always try to not time the market, always continuing to work my way into stuff. But I think just this is kind of being lumped in with tech, and I think, in my opinion, this couldn't be further from that. I mean, yes, it's tech, but it's also just way more related to a reopening type of play than anything else. And so just yet again, another tech stock that is also a reopening play. And so with Airbnb, I love the stock. I think that if you're looking to get into it, there is potential for this to come back down and retest 175. So if it does come back down to there and hold that area, I think it's a great spot for accumulation. But even if you are slightly red on this or looking to add to it, I mean, anywhere it's sitting at this point, before people start to really realize how much growth is in for Airbnb, I think you're going to be really pleasantly surprised under $200.
Do yourself a favor. Go to Airbnb's website and look to book something and scroll out to the dates at any half decent destination, and you'll see the demand for Airbnb is there because you're not going to find a date. Good call on number 4. Number 3, earlier I said about the fact that waste management, because of the cost-cutting strategies employed, the pandemic made the company better coming out of it than going into the lockdown.
Yeah.
Same goes for the number 3 stock, which is Starbucks, SBUX. I love this stock. I mean, I love this stock. They are in the same exact boat. They didn't have a great first earnings in pandemic. They didn't anticipate very well what was going to happen comparatively to their competitors, but they quickly shifted, which is what they always do. They're a monster.
Yeah.
The reason why it's on this list is because of consumer behavior. And I believe, just like people are itching to travel domestically, I think people are itching to get out of the house. And Starbucks is the perfect play, whether it's, remote work, just working from the coffee shop, or whatever, just general being social. I think Starbucks are going to crush it. But also what they've done since the pandemic, focus on drive-through. They're going to benefit off of that. And in general, their grab and goes, I think that's going to help as well with their sales and their traffic, not to mention their international exposure. China is going to be a monster as well. I'm excited about Starbucks and what they deliver to us for the rest of this year and moving forward.
Do you know what we're going to have in common with Starbucks?
What's that?
A 50-year anniversary. This channel is going to last for 50 years, just like Starbucks has. So Starbucks actually today, as of this recording, which is March 30th, today is actually their 50th anniversary. Nice. Did you know that? Yeah, it's 50 years that Starbucks has actually been open. They've been on the market for around 30. And so with Starbucks, I agree. I mean, there's so much potential for this. They continue to expand. They continue to grow. And what they really did well during the pandemic was cut costs and were able to kind of navigate themselves through the pandemic. And this is what we've talked about with things like Nike and some of the other ones. They know how to work themselves through a recession. And Starbucks has really set themselves up well as far as that's concerned. Looking at the chart, $105 seems to be an excellent support. And we've talked about this over the last several weeks with Starbucks as well, that 105 just seems to be a really excellent area to accumulate a position. So if your average is around there, if you're looking to accumulate more, I think I like it there. But watch out for this 112.34 all-time high. I think that we are very much on the cusp of this. It looks as if that potentially we could be seeing a bull flag pattern on the daily chart. So if that does end up coming to fruition, we see a break above this 110 area. Watch out for 112. So don't necessarily wait on 105. If you really want Starbucks, I think that I would just get a position and then see if it does come back and retest there to accumulate. All right. So for me, number 2 is going to be one of the things, Fat Man Zoom. All of the things actually have been kind of struggling except for one of 2. And this one is going to be Google. Google just got upgraded from Stifel just today to $23.50, and people might be looking or watching and listening and saying, I'm not going to buy a stock that's $2,000 a share. You would, I mean, if you were looking at a $20 stock and it was going to move up to $25, you would buy it in a heartbeat, correct?
Yes.
I think that Google is going to be in that same boat. It's a $20 stock that's going to go to $25. It's $2,000. It's going to go to $2,500, in my opinion. The reason why I'm saying this, and again, the travel industry is going to impact so many things. When you're looking to travel, when you're looking for places to go, when you're looking for places to eat, when you're looking for anything related to travel, what are you doing first? You're going to Google it.
Yes.
And so that's going to drive insane traffic to Google. Their profit margins are going to continue to go up. Revenue is just going to continue to fly in. And as you guys are watching this, Google's making money. If you guys watch an ad on this channel, Google's continuing to make revenue. So there's so many revenue streams that they have coming in. I think $23.50 a share from Stifel is actually rather conservative, and I have my eye set on $2,500 potentially by the end of 2021, maybe early 2022.
I mean, technically, this is the trades I love. This is a perfect asymmetrical trade opportunity, 2.5% downside. I'm sure you're going to pull up the daily, but as far as like it holding above 2,000, this is a great spot for it, I think, if you want to make an asymmetrical trade.
Yeah, you look at this chart, and it's been chilling right in this channel between $2,012 to $2,016, and then has had highs of around $21.52. So in my opinion, the way that this has been riding the 50-day moving average, and it's kind of cooled off on the RSI, this is a really good opportunity to get it down in the low $2,000 range, because I don't think it's going to be long, especially when we see those earnings come out and the outlook that it's going to have, that it's going to blast up right over this 2132 mark, which is a recent resistance for this. As this continues to travel through this channel, I think accumulating it under $2,100 is going to yield some serious profit for you if you like Google.
I love it. But now it's time for our highest conviction stock. The number one stock, in our opinion, for April is... Wait, but first, I want you guys to like and subscribe. Do us a favor, hit that like button if you enjoy the content. Don't forget, let us know which one of these 10 is your favorite. But I'm hoping you guys feel us on this last one, Facebook. Facebook stock. First of all, it's actually held up a lot better than the other tech.
Yes.
It was, if you remember, back when tech was rolling towards the end of last year, actually Facebook was lagging.
Yeah.
And we talked about it back in like 250, the 230s, the 250s. We were believers in this, and now it's starting to roll despite all the regulatory issues and what's going on in Capitol Hill. So I'm excited about this stock, and I actually, on the Fat Man Zoom channel, I just did some research for Facebook. For our watches, I just did some research for Facebook.
Yeah.
And I've already loved it, but even more listening to what they have coming up, it excites me. The biggest thing, first of all, fundamentally, you look at it, it's beautiful. They have $62 billion in cash and short-term investments on their balance sheet, which is awesome. I'm really excited about what they're doing as far as shops on IG and on Facebook. The integration is very simple, but you can see how in the future they're trying to create an ecosystem much like Apple is trying to create, or what Apple has created. Yeah. I think they're trying to create a similar ecosystem with WhatsApp, with IG, all the stuff they're doing with Facebook. I think that's sort of coming into fruition. They're also trying to take a run at Zoom, so we'll see how that plays out. IG and Facebook Shops, the way they're rolling it out is genius. They piloted it last May. I believe in October it was official that they rolled it out. It's a beautiful execution, and they haven't even monetized it yet. So they're getting everybody on board, and then beginning 2022, they're actually going to monetize it by taking a little bit off the top of all the transactions. So they're going to get companies using it,
yeah,
and now they have to keep it, and they're going to take a couple percentage points off the top. Companies are also going to be able to run ads easier to their products. And what I mentioned to you is I like how they're integrating it in the future, because now you can create a picture and you can tag a product. I think you're going to see more of the videos that allow you to go straight to a company shop. So if we do a video and if somebody does a video like Nike, for example, and they're promoting their joggers, they can tag their joggers in the video. I love those joggers, and that could go directly to purchase it right there. So the seamless integration is awesome. I'm excited about Facebook. I think Facebook, the way they're diversifying their revenue streams, we didn't even touch on Facebook Marketplace and small businesses. I think their cash pile is just going to continue to grow, and they're going to continue to dominate.
It's funny you mentioned small business about Facebook, because Facebook, there's 8 million small businesses. 8 million businesses, not just small businesses, but corporations as well, that are involved in the Facebook ecosystem. And with a lot of businesses shutting their doors over 2020 and over the pandemic, they're going to open right back up. So I'd imagine that we'll see a much higher percentage of businesses coming into Facebook. If you're starting a business, if you are a small business, you need Facebook to get your product out there for eyeballs on it. So in my opinion, we looked at this and we talked about it a few weeks ago. It was probably about a month or so ago, that 250 to 260 was going to be a great place to accumulate Facebook. But now I think that ship is proverbially sailed. And I think that if you want an opportunity to get Facebook on a potential dip, then maybe 278 is probably your best bet. Though I will say that this has made threats to break that $300 mark again. And I think that we do see this probably by the end of April going into May. I think also we talked about Facebook being a $350 stock. I think that we finally do see that number by the end of the year.
Yeah, there you have it. Top 10 stocks for April.
So what are you going to do, meow?
Guys, thanks for tuning in. Don't forget to like and subscribe. We release a video every Monday, Wednesday, Friday. We're actually in the chat, 8 p.m. Eastern time. So if you're watching now, we are in that chat. And all I have to say to you guys who are watching now, so long, Sucktown.
You the real ones. See ya. That's going to do it for us, guys. Thanks so much for tuning in. As always, we'll see y'all before the bell. B. Smith, Fat Man Zoom. We're out. See ya.
Bye.
Bye. Yes.